Well, that's the background for that. I want to actually bring in Ryan Woolley now. He's the CEO of that grouping. Ryan, thanks very much indeed for talking to us. So that's the background of it. You tell us that, the short-term insurances have been making some record profits. We'll get to the stored payouts in a moment. But on this issue of the profits, you will still get some insurance companies who are facing claims that will deny that they've made such profits in the past year. How do you back that up?
Well, I mean, essentially, we've commissioned an independent study by Dr. Roelof Botha, who's an independent economist, quite well known in the country, well respected. And his study has clearly demonstrated that these insurers have made super profits during the pandemic. Every time that there's been a lockdown, or government regulations getting stricter, there's curfews, there's lack of cars on the road, there's less accidents, there's less break-ins, there's less fires. All these events impact on the earnings of the insurers. Yes, we've got some COVID business interruption claims that we've got out there, but juxtaposed against the amounts of money that these insurers have made during the pandemic, it clearly just demonstrates the gross inequity of the situation.
So, we've had lengthy court battles about whether contracts cover lockdown impacts. We've seen some of that a few months ago. And you've had some clear victories for some claimants, and yet it seems payouts are not moving fast enough, and the amounts certainly don't match what's expected. So, according to your webinar today, what exactly is going on then?
So I think we're just frustrated with the situation. These insurers have made, just to quote some new records for 2021 first quarter, premium income, 40.5 billion. Now, that's a new record. Again, what pandemic insurers? The hospitality and tourism industry have been shut down twice in that time, and they are basically on their knees. And, when you look at operational expenses, have grown to 16 billion for these insurers. That's almost an increase of 85%. And these are just, salaries and lawyers' fees, in our view. Total assets you mentioned, 220 million, that was at December. If we look at the end of the first quarter, it's up to 286 billion. These numbers are startling. And when you look at that against we've had victories in court. We won in December. We had an SCA decision ordering these insurers to pay, and for the impact of the government regulations as well. By January, they all conceded and said, fine, we'll start paying. But we're now in July, and, we're yet to see any real traction on these claimants' payments. There's just bureaucratic process after bureaucratic process.
Yeah, if I can come in there, you seem to be having some success with some insurance companies and not much with others. Just paint that picture for us.
So Hollard, South Africa have been exceptional. Once the judgments were made, they made swift decisions, they got on with it, and they've paid their claims. To deal with them has been exceptional. Their clients were satisfied. Old Mutual, we had a bit of a bump in the road, but Henny Nokia from Old Mutual Insure brought us back to the table, and we've seen a remarkable turnaround with our clients being, ecstatic with the result, and just showing that they do actually care about their clients and that they want to settle these claims. Against that, we've got Santam who, are telling us all the right things, but actions speak louder than words, and we're still not seeing our claimants receive decent interim payments or full settlements. And we're now 6-7 months down the line. It can't carry on.
How dire is the picture? Because just this week we've heard that these income support plans, the TERS income support plan in particular, would be reinstated, at least for the new restriction period. I'm wondering how dire some of these establishments really are, virtually hanging from a thread. And you said today in your webinar, whose survival sometimes depend on these payouts. Then what is the next move? We deal with our clients every day, and those clients are in a desperate state. They are really on their knees. And, at the moment, they've dipped into their savings. They've used whatever financial means they have available to them. But it's just not enough, especially when you've got an insurer who's on the hook for these claims, yet, they're squabbling over
should we be reimbursing you for salary cuts that you forced your staff to take or not? I mean, those staff members are, waiters or, housekeeping and all that. They are, sad as it is, they're from the poorest of the poor. And they are the ones that the insurers are penalizing. And we are seeing those sort of quantum debates and quantum fights just drag out the process, where insurers should just try and find an equitable solution to these things, sit around the table and settle these claims.
Ryan Woolley, thanks very much indeed for your time this evening.